With 2014 almost done and dusted, it's a good time to reflect on your portfolio. This is Tonight. I'm Bruce Whitfield. Tonight I'm joined by Nic Norman-Smith from Lentus Asset Management and Vestact's Sasha Naryshkine to discuss how to reposition your portfolio for 2015. If I'd had this piece of paper in front of me this time last year, I'd be rich. But that's the trouble, isn't it, Nic Norman-Smith? We don't have the bit of paper that reflects the year gone by.
And even if you did, and you looked at the top and saw Telkom, you probably would have thought someone was playing a trick on you anyway.
But Telkom's up 150% this year. It's the most extraordinary performer on the JSE. But even companies that we would never have expected to continue doing well, Sibanye Gold is up nearly 60% this year. You look at Pallinghurst, which has nearly doubled. The property companies have done well. Financial services done well. Even something as overvalued as Aspen Pharmacare, Sasha Naryshkine's up 60%.
Overvalued compared to what?
In terms of the value investors, you know, guys like Captain Boring over here.
I don't care about that piece of paper. Do you have the one for this time next year?
I do. We'll get on to that in just a minute.
I'm looking for that one. Bruce, I guess it all depends. I mean, I think all those big transactions that Aspen have had, and granted it is on a big multiple, and on, you know, the market's expecting some big things from it. And it's great that you have Nic and I on this program, because we'd probably have two completely different portfolios, but the end game is exactly the same. So I think, you know, Aspen isn't for everyone, but I remember one set of results in which they said, Aspen, the 9th biggest generic company in the world. And that said, you know, the penny dropped and said, okay, so Stephen Sard wants to be number one.
Yes, absolutely. And I think he's probably headed that way as well. Are you sorry that you don't have Aspens in the portfolio?
Of course, I would love to. I'd love to own it. But
did you start the year with Telkom in your portfolio?
No.
Okay, up 146%. All right. Did you start the year with Sibanye Gold in your portfolio?
I also didn't own it when it came down about 70%.
We're talking about the year in review.
Sorry, how have they done over 5 years?
Yeah. So we're looking at, I don't have 5 years. Do you have Sibanye Gold in your portfolio? No, you don't. Do you have Zeder?
Unfortunately.
No.
Too small. Okay. Do you have Pallinghurst?
No.
Yes, like you guys have missed all the big winners this year. Okay, yeah, those are the big winners.
It's actually about avoiding the losers.
But that's the reality, isn't it? I mean, we look back, and it's very, very good to look at 2014
I
in
would
review.
prefer to see a 5-year view on those stocks. Obviously, for Sibanye, you don't have one, but you could probably mesh the price with Goldfields, and you're probably still fine, because I had to look at the gold stocks as a collective over 5 years. Last week, and I think they were down something over 50% over 5 years. So at one stage they were up 50-odd% this year. Now they're only up 10.
And don't discount the power of momentum. You know, so we see these expensive stocks. So Aspen's a great example. Pharmaceutical sector. This year, the pharmaceutical sector has had a record M&A deal. So we haven't owned Aspen. We've owned Johnson & Johnson overseas. It hasn't done quite as well as Aspen, but you know, I think the risk is certainly a lot lower. Well, in rand terms, it probably actually has. Yeah. So, but the point being, you can't call the top on these, but the valuations are pointing to the fact that you're unlikely to do very well going forward. Maybe it'll carry on for another year, but as Sasha says, over a 2, 3, 4, 5 year period, when you pay up for these growth and momentum stocks, you generally are disappointed.
Consensus was, beginning of this year, we'd probably get 10% growth on the JSE. Even that was regarded. We're at about 13 so far this year. So overall, the market is up about 13%, which is not bad going at all. And we will end there or thereabouts. But when you look at the huge contrast between the winners and the losers, the winners are industrial South Africa, bizarrely enough, because of their offshore exposures predominantly, and financial services. I mean, for Vestact and First Rand, both up 50% this year as the repair jobs there have come to fruition. Those have been really good. But you look down to the bottom and you look at the losers, and we have been pulverized by the likes of, I mean, Ellie's and Pinnacle are inconsequential from an index perspective. Ellie's down 80% and Pinnacle down 57%, Saw's down 51%. But you look at the big ones of Kumba and Lonman and the platinum shares generally, those are the ones that have kept this market back. The value stocks, Nic Norman-Smith. Is it time to go deep value?
It's been a terrible time for value, particularly locally, for a number of years now. I mean, growth momentum's done really well, and you're starting to see the articles, is value dead? And that's just the time that you need to start looking at it. So just like the expensive stocks have got more expensive as the momentum's pulled it, some of the cheap resource stocks have got even cheaper. So you've got to differentiate. So something like a Kumba, we still are a little bit nervous of. So you can't just look, even as a value investor, you can't just look and say, the PE is low. you've got to actually look down and understand why is the PE low, because margins were at
Don't worry,
record
it'll get
highs,
high next year.
etc., and that becomes a value trap.
No, but that's the problem, isn't it? Because here we go. If we had to take the worst performers of 2014, is there a single share amongst these worst performers that you would buy as a value investor? Would you buy Ellie's?
No.
Broken. Pinnacle
I
Holdings.
wouldn't say broken.
Pinnacle Holdings.
Pinnacle looks fundamentally quite cheap, so it might maybe a small exposure in it.
Hospitality Property Fund, down 55% this year.
I should have done that deal with City Lot.
Assor, down 51% this year.
No.
Okay, Phew, this is getting interesting. Equestra, down 42% this year. Maybe an opportunity there.
Yeah, perhaps.
There's a fundamental business.
Yes, there is. I'd actually like some of the miners more directly, though, than the ones with that exposure.
Sasha?
No.
No, okay. We're not getting very far here. Lonman?
Oh, I don't know. Some people say yes.
What do you say? I don't care what some people say.
Well, I'm starting to hear more and more people say yes, but not for me.
I
Single
prefer
commodity
the other
stocks.
platinums, but
Okay.
Yeah.
sure, it's
Maybe Lonman.
Yeah.
Kumba, still a problem.
yeah.
Okay.
I'd rather buy Anglos.
And although
I
Kumba,
wouldn't own Anglos either.
we'll get to Anglos in just a moment. But here's Kumba, which is still a bit like African Bank was before it collapsed, trading on this magnificent dividend yield. And people have been buying it for the dividend yield. But you can't have your core commodity price dropping as low as it has been for so long and still maintain your dividend, surely.
And just forget the business for anything. Just look at the accounting statements and the numbers, and you look at what the standard margin for an iron ore producer is over 20 years, and look what they got to at the peak, and it was sort of 80% or something when it should be around 20. Now, immediately that should tell you that's unlikely, it's not different this time, it's going to normalize back, and that's exactly what the market's done, and it's happening. So if you take those normalized margins and you look at it, and you add in then the oversupply of iron ore in the market, and I'm still nervous.
Let me add to that, because China's essentially been responsible for 50% of consumption of commodities, but yet they're only 14% of the global economy. So, where to next? I mean, they still have hundreds of millions of people to urbanize. And India is probably the elephant in the room as far as the next commodities boom is concerned, and even our continent, because there you've got, the last two frontiers in terms of an infrastructural development point of view.
If governments can afford it.
Yes, well, maybe India getting closer and closer to that. They've done a lot structurally.
Let's go through a couple more. Stefanuti stocks, down 33% this year. Worth a punt.
Yeah, perhaps worth a punt.
What? Cheapers. Okay, we got a punt. What about Aquarius Platinum? No. Avenge.
Yeah.
Okay. Going construction, which is interesting. Bell Equipment then in that similar space.
I quite like Bell Equipment.
Mining.
Small cap.
Okay.
It's got the value that I really see in Bell is the distribution network that they've got both in South Africa and outside. So they manufacture the really good product.
Yeah.
And once you've got that product in there, people aren't likely to change because they know how to service it. They've got the parts, etc., etc. Plus, if you plug other products into that distribution network into Africa, I think there's a lot of value, and it's trading at 50% of net asset value.
Good friend of mine who went to your old school works up in Mozambique, far northern Mozambique, and he says, good things are happening there, but it's small for the time
That's
being.
the trouble. The thing that scares me is when I'm driving around with my kids, and they go, bulldozer, and you just look at these fields of yellow in industrial parks in South Africa, you think, oh, there's a lot of a backlog of equipment. And that's my concern there. It's the 6-year-old analysis.
Which is why you need to buy it cheaply, and you need to understand it's a very cyclical business.
Caterpillar's seen a fall, obviously, in the mining, but quite a big push in the agricultural and power. So, we suffer from power shortage on this continent, and locally.
Yeah, I'm just looking at the big fallers of this year, and okay, so construction is where you're beginning to get excited about. Nic Norman-Smith, where you're excited, Sasha?
Same old one. I think it was the Berkshire 1988 annual letter in which the chairman, Warren Buffett, said, my favorite holding period is, Nick?
Forever.
So, the same stocks we held last year, we're going into holding.
So you'll continue to hold what?
Aspen, Naspers, MTN.
So the big winners of this year, except MTN, which didn't have a particularly good year, I don't think. You're holding
Richemont hasn't necessarily been a good performer in the industrial space.
Okay, but give me something interesting to think about, please.
Well, we have recently bought a lot more into healthcare discovery, I guess you could say, still in insurance business, but added MediClinic quite aggressively, just on the basis that out-of-pocket spend from the Swiss is higher. Now, for some people, Mediclinic is quite expensive, but they've got a big shareholder in the form of Remgro,
yeah.
so I think they're going to continue to expand aggressively.
Okay, so you give me Mediclinic
As a new one.
That's
Yes,
not a hospital pass for 2015, is it? No.
Well, you're on the wing, Bruce. Almost anything could happen.
Nic Norman-Smith, where are you going for 2015 as your little gem, if you
I
like?
think Anglo-American. So that traded up to 3-4 times book value when everyone was raging about the commodity
When
super
Cynthia Carroll
cycle.
was buying them back. Yeah.
Where is that now? Exactly, like all of these wonderful resource companies. That's now trading at book value. So we were always a bit skeptical about the resource super cycle, but we also, at the same time, we don't think that no one's ever going to buy resources again. So that's attractive value. We still think there are a lot of opportunities offshore, not nearly as many as there were, but something like an IBM is a cash churning machine with really strong product line and good prospects, trading at 10-11 times earnings. I think what we have been doing though is harvesting quite a lot of the gains. So we had a lot of offshore exposure for clients in companies like Johnson & Johnson, a lot of the old school tech companies, your Microsofts, Intel, Cisco's, those have done phenomenally well. Harvesting some of those gains, and don't be afraid to sit on a bit of cash.
But how long do you sit on cash for? And that's the great risk in this momentum market, with the Chinese stimulating growth, with the Europeans determined to keep stimulating. It looks like this continues to be a momentum-driven market.
Yeah, it will until it isn't anymore, and then it's going.
And at what point does that stop?
Well, who knows?
So you called it 5 years too soon.
What you've got to do is, if you can find investments in this environment that you think are going to generate you a through the cycle strong return. So I don't know when that cycle is going to turn, but someone like IBM is going to be around in 20 years, 50 years. And at 10 times earnings,
Will Berkshire still be a shareholder?
I think.
Okay,
I think
so
it's
you've
attractive.
given us Anglo and IBM, you've given us Mediclinic, Sasha. Give me one more before I let you go.
Well, I'm going to stick with Richemont. It's a
Richemont?
business- Yes.
Okay.
Timeless.
Timeless. Hopefully not. There we go. Full of puns we are this evening. Nic Norman-Smith from Lentus Asset Management and Vestact. Sasha Naryshkine. Looking at the year that was, some of the huge winners. Telkom took everybody by surprise, including probably Telkom's executive, up 150% odd so far this year. We'll see where that one ends up. Lots of people are continuing to buy Telkom. Right down at the bottom, you got the likes of Ellie's and Pinnacle. Would they buy in that particular space? Maybe with a punt, did you say, on Pinnacle? I think you did, Nic Norman-Smith. Thank you for watching. There'll be more tonight, tomorrow. Lots of information in this particular show. It's available online in case you missed it. Good night and goodbye.